In a tumultuous week for global markets, cryptocurrency faces a significant downturn amid geopolitical tensions and regulatory shifts. Meanwhile, Europe takes decisive action against money laundering in the crypto space. Here are today's top 10 stories you need to know. In a bold move, the UK's Financial Conduct Authority conducted raids at 8 locations in London suspected of illegal peer-to-peer crypto trading. The regulatory body is ramping up efforts to tackle the growing concerns surrounding unregulated trading practices in the cryptocurrency sector. This crackdown comes amid rising scrutiny over how cryptocurrencies are traded and managed within the UK. Authorities are increasingly aware of the potential risks associated with unregulated exchanges and the need for consumer protection. The FCA's actions signal a commitment to enforcing existing regulations and ensuring compliance within the financial landscape. As crypto trading continues to gain popularity, regulators are stepping up their oversight efforts. This development may lead to more stringent regulations across the broader UK financial market. Observers will be watching closely to see if these actions impact trading behaviors in the region. The FCA's approach could serve as a model for other nations grappling with similar issues. In a surprising turn, Mercado Pago announced the cessation of its Mercado Coin operations, a loyalty token launched in 2022. This decision marks a significant retreat from the cryptocurrency experiments that the fintech company had undertaken. The company cited challenges in the evolving digital asset landscape and a reevaluation of its strategic priorities. Mercado Coin was intended to enhance customer engagement through a blockchain-based loyalty program. However, the complexities of the crypto market may have led to questions about its long-term viability. This cessation reflects broader trends in the fintech sector, where companies are reassessing their involvement in cryptocurrencies amidst fluctuating market conditions. Mercado Pago's retreat could serve as a cautionary tale for other fintech firms exploring similar initiatives. The industry is closely monitoring how this decision influences consumer trust and engagement moving forward. The Humanity Protocol faced a severe setback after a significant hack resulted in a loss of $36 million. The incident has prompted the organization to pivot toward enterprise AI solutions to mitigate future risks. Following the breach, the protocol's founder announced a strategic shift, emphasizing the need for enhanced security measures in their operations. This hack raises concerns about the vulnerabilities present in blockchain networks and the ongoing challenges they face. As the protocol moves forward, it aims to implement stronger safeguards and improve its infrastructure against potential threats. The attack has drawn attention to the importance of cybersecurity within the blockchain space. It also highlights the growing trend of integrating AI technologies into crypto projects for improved security and efficiency. Observers will be keen to see how the Humanity Protocol adapts to these challenges in the evolving digital landscape. The FTX bankruptcy estate is set to distribute approximately $900 million to creditors in its 5th wave of payouts. This significant milestone comes as the collapsed exchange works to recover assets and repay its stakeholders. The ongoing bankruptcy proceedings have been closely watched by the cryptocurrency community as they reflect the challenges faced by the sector. Creditors are optimistic about the potential for recovery, but uncertainty remains regarding the timeline and total payouts. This latest distribution is part of a broader effort to resolve claims and restore some level of trust in the market. The FTX case has highlighted the importance of regulatory oversight and the need for transparency in cryptocurrency operations. As the situation develops, stakeholders will be eager to see how the remaining assets are managed and distributed. This could set a precedent for future bankruptcy cases in the crypto industry. Canada is advancing a new stablecoin framework designed to modernize its payment systems and enhance the digital economy. This regulatory initiative aims to increase the efficiency of transactions while prioritizing consumer protection and financial stability. Scotiabank has emphasized that the primary objective is to streamline payment processes rather than fundamentally alter the existing financial landscape. The move underscores a growing acknowledgement of stablecoins' potential to facilitate quicker and more secure transactions. As this framework takes shape, industry players must navigate new compliance mandates, which may require significant adjustments to their operational models. This initiative is part of a larger global trend, with numerous nations actively seeking regulatory clarity in the cryptocurrency sector. The implications of Canada's framework could resonate beyond its borders, potentially influencing how other countries approach the regulation of stablecoins and digital payments. Looking ahead, successful implementation could position Canada as a leader in the digital currency space, setting a benchmark for future regulatory efforts worldwide. In a significant regulatory development, Japan plans to reduce its cryptocurrency tax burden to a uniform 20% rate. This new framework categorizes crypto profits under a separate taxation scheme aimed at boosting local Bitcoin trading. The decision is a response to increasing competition from other countries offering more attractive tax regimes for digital assets. By simplifying the tax structure, the government hopes to create a more favorable environment for traders and investors alike, signaling its commitment to becoming a global hub for cryptocurrency. This move reflects a growing understanding of the need for regulatory clarity in the rapidly evolving cryptocurrency market. Japan has historically maintained a cautious stance on digital currencies, but as the global landscape shifts, so too must its policies. Analysts suggest that this tax cut could lead to increased trading volumes and market activity, enhancing Japan's position in the Asian crypto scene. As the new tax policy is set to take effect soon, it may catalyze a resurgence in Bitcoin trading and investment, revitalizing the sector domestically. Singapore's regulatory authority has granted expanded permissions to Ripple, allowing the company to offer wider XRP and RLUSD services. This significant approval enables token-based settlements for banks and fintechs within the city-state, marking a pivotal moment for Ripple as it seeks to strengthen its foothold in the rapidly evolving Asian market. Ripple's expansion comes at a time when Singapore is positioning itself as a global leader in financial technology, fostering an environment conducive to innovation and digital transformation. By enhancing its service offerings, Ripple aims to provide cutting-edge solutions for financial institutions eager to integrate blockchain technology into their operations. This regulatory nod not only underscores the growing acceptance of cryptocurrencies within established financial systems, but also highlights a shift in how traditional finance is embracing digital assets. As Ripple rolls out its new services, industry stakeholders will closely monitor the impact on the competitive landscape of digital assets throughout Asia. In the coming months, Ripple's success could inspire other countries to adopt similar regulatory frameworks, accelerating the adoption of blockchain solutions worldwide. In a landmark operation, Europol has successfully dismantled the Cryptomixer service, seizing $1.51 billion in Bitcoin linked to money laundering activities. This platform was notorious for its role in facilitating transactions for ransomware groups and darknet markets, making it a significant player in the illicit cryptocurrency ecosystem. The operation involved the seizure of servers, data, and over $29 million in Bitcoin, marking one of the largest actions against crypto-related crime to date. This decisive action highlights the ongoing efforts by European authorities to combat financial crime in the cryptocurrency space, which has been increasingly exploited by cybercriminals. The dismantling of Cryptomixer sends a strong message to other illicit actors operating within the digital currency ecosystem, indicating that authorities are intensifying their scrutiny. It also underscores the importance of regulatory frameworks in addressing the challenges posed by anonymous transactions. As authorities continue to enhance their capabilities, the operation may lead to improved security and trust in the cryptocurrency market. Moving forward, we can expect more collaborative efforts among international law enforcement agencies to target similar platforms operating globally. The cryptocurrency market is experiencing a significant sell-off, primarily driven by escalating geopolitical tensions, particularly the fraught relationship between the US and Iran. Bitcoin, the leading cryptocurrency, saw a sharp decline of nearly 6%, trading below the crucial $63,000 mark. This downturn was compounded by hawkish comments from the Bank of Japan regarding potential interest rate hikes, adding pressure to risk assets. The broader market sentiment has soured, with Bitcoin dropping further to $62,000 as investors grapple with fears of escalating hostilities. This downturn is not isolated to Bitcoin. Altcoins are also feeling the heat, with Polkadot experiencing a staggering 11% plunge. Market analysts emphasize the importance of the geopolitical landscape in shaping investor sentiment, as external pressures often lead to a risk-off approach among traders. The current market behavior reflects heightened caution, leaving investors to ponder whether this dip represents a strategic buying opportunity or signals impending further corrections. As the geopolitical situation unfolds, the coming weeks will be crucial in assessing the cryptocurrency market's resilience and stability. Investors will closely watch for signs of recovery or additional volatility that could shape the trajectory of digital assets moving forward. The cryptocurrency market has experienced a significant downturn, marked by a sharp sell-off that has left many investors on edge. Bitcoin has seen a decline of nearly 6%, trading below $63,000. This sell-off was catalyzed by hawkish signals from the Bank of Japan regarding interest rates, which has raised concerns about the global economic outlook. The central bank's stance suggests tighter monetary policy, which can lead to reduced liquidity in markets, impacting riskier assets like cryptocurrencies. Compounding this issue are rising tensions between the U.S. and Iran, which have further pressured risk assets, creating a climate of uncertainty. Investors are now grappling with a broader market downturn, as altcoins have also suffered, with Polkadot dropping as much as 11%. The negative sentiment is reflected in the substantial outflows from Bitcoin ETFs, which surpassed $290 million, indicating a shift in investor confidence. Analysts suggest that this current market behavior could signal a historical buying opportunity, with some indicating a potential bottom near $44,000 if trends persist. As the market reacts to these external pressures, investors will be keenly watching for signs of stabilization or further decline. The coming weeks will be crucial for the cryptocurrency market as it seeks to rebound from this volatility and regain investor trust. Thank you for watching today's news recap. Which story impacted you the most? Let us know in the comments below, and don't forget to like and subscribe for more updates.